Now when we create a message, the message can originally be a paper message, like this example of a check which we took. So you could write a check and make a payment to somebody, or you could simply create an electronic message by swiping your card on a POS machine at a merchant's place, telling your card issuing bank that you would like to make a payment to this merchant at whose POS machine you have swiped that card. To some of them, a message of payment can get created in an electronic manner. It can get created in the paper manner. So you could either use a piece of paper or electronic. And when we create messages electronically, you can use your internet banking, you could use a mobile app, and a similar way you could use SWIFT for creating the message. Now when a payment message is created, the same message can be used till the beneficiary is credited, the beneficiary is paid. For example, I give a check to you and your bank can use the same paper till the end, that is till you get paid by my bank. Or alternatively, when we use a card could also be used to make a payment from end to end, and an electronic message would be used from one end to the other end. So to put this in a nutshell, when I create a message, the message can be used throughout the process in the original form. For example, I'm creating a message in a paper form or an electronic form. Throughout the process, the same electronic message or the same paper message can be created. Alternatively, I can create a message in first form, that is a paper, and convert that into electronic, or I may create a message in SWIFT form, which is electronic, and later on convert that into a piece of paper. So what I'm trying to tell you is that when I create a SWIFT payment, it's not necessary that throughout the process it will move in its electronic form only. It is possible that I use a SWIFT message and convert that at a later point of time into a paper message like a check message. So when we are going to create a payment, every time we create a payment, we are going to start that payment transaction with a message. Now let's look at the kind of transactions which we can do. We can do two kinds of transactions when we have a payment. I could have a transaction of push and I could have a transaction of a pull. So when I want to pay money to you, I will be pushing the money to you, and many systems like the RTGS systems or the card payment systems are examples of pushing the money to somebody else. Alternatively, I could collect the money from you, that is I could pull the money from you. So I could have two basic kinds of messages, that is a push message and a pull message. And the SWIFT system also allows you to have different messages for push and a different message for a pull. Currently in this session, we'll be focusing our attention the discussion mainly on the push method, not on the pull method. I'll explain how SWIFT messages are used to push the money, and maybe at a later point of time in some another webinar, we will discuss how the pull messages are used by using the SWIFT MT service. Now one more point we need to understand before we move forward from this concept of message is understanding the kinds of messages we have in form of value messages and in form of non-value messages. When we move a value message would move money, and when we use a non-value message, the non-value message is going to move information only. For example, when you write a check is a value message and it moves money from your account to somebody's account whose name you have mentioned on that particular check. Whereas after the check is debited to your account, your bank will provide you with a statement of account. This statement of account does not move money. This statement of account moves only information. To summarize then, we'll have two kinds of messages, a value message and a non-value message. Now once we have created a message, either in paper form or electronic form, we will take it to the next step of clearing. Now where is clearing required? Clearing is required only when I want to move money from one bank to another bank. If the money is moving within a particular bank, I will not use any clearing systems. That is like moving the data within my laptop. I want to move the data from drive C to drive D of my laptop. I would not need any network, but I would need a network when I want to move the data from my laptop to somebody else's laptop. So in the similar way, when I want to move money from one bank to another bank, we'll need the clearing process. When the clearing process is being done, the clearing house will compute the amounts to be paid by one bank to other bank. I'm going to use the word obligation to mention the calculation or to speak about the calculation of money to be paid by one bank to the other bank. And the last element is the settlement. Settlement is when the beneficiary gets credited. To summarize, on this slide, we have three key elements of any payment: the message, then the clearing, if the message is moving outside that particular bank, and the third one is the settlement. I'm going to use two more words. There could be an incoming payment, there may be an outgoing payment. Now, every time you create a message, you need to use either an electronic mechanism or the paper mechanism, and SWIFT provides you with the mechanism, with one of the mechanisms in electronic forms to create the message. SWIFT does not provide the clearing service. SWIFT does not provide the settlement service. SWIFT provides only the messaging service. To sum up then, SWIFT provides the messaging service. It does not hold any accounts. It does not hold any clearing services. At the same time, though we said that SWIFT does not provide any clearing services, it is indirectly involved in the clearing services for payments. Now, there are many systems such as Target 2 in single euro payment area or the large value transfer system in Canada will use the SWIFT Y-copy mechanism as a backbone for clearing and settlement of payment transactions. Which means out of the three key elements, SWIFT always supports the message in electronic format. SWIFT may support the clearing, but SWIFT is not involved into the settlement. So the role of SWIFT is now in this discussion limited to the message part. And then we will not be discussing how SWIFT carries out the clearing, because SWIFT provides only the backbone. SWIFT does not actually on its own directly carry out the clearing process. Now, having understood the three key elements, let's move to the next part of understanding who is the SWIFT and what do they do. Now, with this, we look at SWIFT as a cooperative. Now, SWIFT messaging services are trusted and used by more than 11,000 financial institutions across the globe, and they are there in more than 200 countries. In May 1973, 239 banks from 15 countries came together and decided to build a common messaging system. And in May 1977, the messaging system which you see today clicked into life. 6 months later, they had more than 518 members. Now today, they have got more than 11,000 plus members. They are spread across 200 and plus countries. The FIN service, which we are going to discuss at a later point of time, is available 99.997%, and the services exceeded the availability targets by more than 100%. They carry more than 6.5 billion messages under FIN service every year, and the average daily number of FIN messages is 25.8 million numbers of messages. The peak which they achieved was 30.3 million messages on one single day. SWIFT is a Belgian company with headquarters near Brussels. It has got 20 offices in the world's major financial markets. It has got 3 data centers, one in USA, the second in Switzerland, and the third in the Netherlands. And it has got 4 service centers to ensure fail-safe operations 24/7. As we said earlier, it does not provide clearing or settlement services. It does not hold any accounts. It does not hold any assets. The SWIFTNet's messaging services run on Swift Secure Internet Protocol Network, SIPN, which is a protected private network offering the highest available rates in the industry. They offer encryption, authentication, and control, and they also offer the integrity control and non-repudiation to us. So this is the basic background of what SWIFT does. Let us now discuss how would we connect to SWIFT. Now, when we connect to SWIFT, this discussion we are going to divide into 2 parts: the banks connecting to SWIFT and the corporates connecting to SWIFT. And when they connect to SWIFT, they can send messages to each other. Banks can send a message to each other. The corporates can send a message only to a bank. So let's understand how a bank would connect to SWIFT. Now, when a bank wants to connect to SWIFT, it may use one of its most popular services called SWIFTNet FIN. Now, FIN is the longest established SWIFT's FIN messaging service. It enables the exchange of messages formatted in line with the SWIFT MT standard, which we're going to discuss now. FIN enables the exchange of messages on a message per message basis. That means you can send one message one by one, you can send the messages, and it supports the exchange of proprietary formats also. It's not necessary that every time you send a message, it must be in an appropriate format defined by the SWIFT. Sometimes it supports the exchange of proprietary format messages between market infrastructures like stock exchanges or bank or the clearing houses and their customer. The FIN service works in store and forward mode and offers extensive functionalities like a message copy, a broadcast to a group of other users, and the online retrieval of previously exchanged messages. You can retrieve the messages by using the SwiftNet FIN. The second service which you use is called SwiftNet File Act. The File Act is to be used for transferring files. It enables transfer of large files, and typically it is used to transfer large batches of messages like a bulk payment file or very large reports or very large data. Under File Act, there is another service called File Act Copy Service. It enables the sender of a file to trigger a copy of the file header to a third party for authorization or even for information under the T-copy model. So under File Act and the File Act Copy Service, we could have a Y copy mechanism or a T-copy mechanism. And these copy mechanisms are usually used in the payment systems for authorization purposes by the clearing houses. For example, in target to in single euro payment area, we will use the Y copy mechanism. Even in the large value transfer system in Canada, we use the Y copy mechanism. So the second mechanism which we have is called the SwiftNet File Act, again enabling the banks to send a bulk file containing large payment messages to your banks. The third system is called SwiftNet Interact. Like the FIN service, Interact will enable the exchange of a message on a message to message basis. That means you are not uploading a bulk file here. You are creating one message and sending message one by one. It supports here also the exchange of proprietary formats. But Interact has increased flexibility, and here in addition to having the store and forward mechanism, I could have a real-time messaging and a real-time query and a response options. Let's understand how. Suppose I am a customer of a bank in United States. Let's say I am in UK, I am a bank in UK. I am a customer of another bank in United States where I maintain my Nostro account. If I want to communicate in real time with my Nostro agent in USA, I would use SwiftNet Interact, maybe interact with the application on the other side. Now, how do you use it every day? You use a similar system every day. When you connect to your own bank, every day probably, through the internet banking, what you do is open your account at a particular bank. Using that account, you may move money from one place to the other place. You may even ask for certain activities to be done by the bank, like you may request for a checkbook. So when you use internet banking and connect to your bank to carry out transactions in your bank account, you're using your normal internet provided by some local internet service provider. But if you want to use a secure and a structured mechanism to communicate in real time with your bank, the way you use your internet banking facility, you could use SwiftNet Interact to have real-time connectivity. The Interact service also helps you in exchanging the MX messages. Now, MX messages would mean ISO20022 messages created with the Swift standard. So these are flexible XML syntax and they are developed in line with ISO20022. If you want to exchange them, you need to use the SwiftNet Interact. The last one is the SwiftNet Web Access. With Web Access, the SwiftNet users can browse securely on the financial websites available on the SwiftNet. Now, why do we need this web access? Because if a banker uses normal internet, there could be cyber threats, which is an ever-present risk, and internet, which is normal internet, may not measure up to the security and the reliability demanded by the banks when they want to do their transactions. And on the other hand, when you use the proprietary channels like internet banking offered by your bank, it is possible that you need to invest a lot of money in managing those. So instead of using this, you could use the SwiftNet Web Access. Now let's understand how the corporates would connect to the Swift mechanism. There are three basic methods of how corporates would connect. The first mechanism, which is used by a corporate to connect to Swift, is called the SCORE, the Standardized Corporate Environment. Now, the Swift for Corporates initiative was initially introduced in 1999 in a limited form. SCORE in the current form was introduced in January 2007. Now using this score, a corporate can communicate with any bank having SWIFT connectivity. Now when a corporate communicates, however, it cannot communicate with another corporate using the score mechanism. It can communicate only with the bank. To summarize, if a corporate is using score, the other side, the recipient, must always be a bank. A corporate is not allowed to send all different types of message using this score mechanism. Let's understand what kind of messages they can send when they are using this score mechanism. When we speak about different categories, when a corporate wants to communicate with a bank, it can use category 1. And out of category 1, a corporate can send to financial institutions message type MT101 and a message type MT104. Now we will be discussing this MT101 at a later point in time. In addition to this 101 and a 104, a corporate using score can also send MT192, MT195, a query, MT196, the answer, and the MT199. What a bank can send to a corporate is an MT195, an MT196, and a MT199. This is now about category 1 messages, which corporates can send to the financial institutions and what the financial institutions can send to the corporate. Now let's move further and look at what category 2 messages can be exchanged between a corporate and the bank. A corporate can send an MT210 notice to receive, which also I'm going to discuss at a later point of time today. But a bank does not send any category 2 message to the corporate. Now this is again, we are limiting our discussion to the corporates using this standardized corporate environment. The third type is category 9. Because our discussion will be focused on category 1, category 2 and category 9, I am explaining only those messages which a corporate and a bank can exchange between them. When it comes to category 9, we have got cash management and customer status messages. A corporate can send an MT920 request message requesting for a statement, an MT995 a query, and an MT999 a free format message. On the other hand, a financial institution can send MT900, MT910, 940, 941, 942, 950, 996 and a 999 to a corporate. So this is the category which categories of messages which the banks and the corporate can exchange with each other when the corporate is using the SWIFT score, that is standardized corporate environment. This is point 1. Now I'll be discussing category 1, category 2 and category 9 today. So let me explain the details of these messages at a later point of time to you. Now the first mechanism which we discussed about how corporates can connect was the score. The second mechanism is a closed user group. Now you could have two types of closed user group: a member administered closed user group and a many-to-many closed user group. Now in a member administered closed user group, a bank like Bank A or a Bank B or a Bank C could create its own CUG, and if a corporate joins that CUG, a corporate would be able to communicate only with that bank which created the CUG. For example, if Bank A creates a CUG, a corporate joining that CUG will be able to communicate only with Bank A. If Bank C has created its own CUG, then a corporate will be able to communicate only with Bank C, which means in a member administered closed user group, we'll have a one-to-one connectivity between the corporate and the bank. In the member administered closed user group, the corporate does not become a SWIFT member. The corporate becomes a sub-member, that is a member which is a bank under whom the corporate would be operating. On the other hand, you could have the concept of a many-to-many closed user group. It is possible that a couple of banks like Bank A, Bank B and Bank C come together and they form a closed user group. In this situation then, if a corporate joins that CUG, a many-to-many CUG, that corporate would be able to communicate with any bank which is a member of that CUG. So I could say in this way that this is a limited version of the standardized corporate environment. In the standardized corporate environment, we could communicate with any bank. This is the score with the boundary, which is the CUG. So you could communicate as a corporate with any bank which is a member of that particular closed user group. So in our example on the screen, we have Bank A, Bank B and Bank C. If corporate A joins that group, corporate A will be able to communicate with Bank A or B or C. This is how the connectivity would come. The next mechanism is the treasury counterparty. In a treasury counterparty mechanism, a corporate which is a member of SWIFT can send a message to any bank which is there on SWIFT, but it has got a limitation. The limitation is the message which you are allowed to send under the TRCO model is a treasury deal confirmation, which means it is only post facto. Once you have done a deal with a bank, maybe with the treasury of the bank, you can only send a confirmation message that we confirm having done this deal with you, which means you cannot use the TRCO model for creation of payment transactions. You can use the TRCO model only to confirm the transactions which you have done with a particular bank. To summarize then, there are 4 mechanisms which a bank can use to communicate with SWIFT. One is SwiftNet Fin, the second is SwiftNet File Act, the third is SwiftNet Interact, the fourth is SwiftNet Web Access. And when a corporate wants to connect, it would use these 4 products: a score, the member administered closed user group, the many-to-many COG, and the TRCO or the treasury counterparty model. Now, when we saw this kind of connectivity of corporates and banks, now let's move forward to the actual SWIFT MT messages at a very broad level. So when we speak about these actual SWIFT messages at a very broad level, we'll have different types of messages. When we speak about the SWIFT messages, they are divided typically into 3 types. The first type is the user-to-user message. Now, user-to-user message could be one bank, one financial institution, sending a message to another financial institution. So when somebody wants to make a payment, at that point of time, the paying bank may use a user-to-user message to communicate with the bank to whom they would like to make the payment. The user-to-user messages are further divided into 9 categories, which we will see on the next screen. The second kind of message which you have are the system messages. The system messages are sent by SWIFT system to the user and vice versa. Now in this you could have user to SWIFT messages. The user creates a message. For example, he wants a delivery notification. He wants to retrieve something. In that case, he will request the system, request the SWIFT system that I would like to retrieve the past messages. So this is a message created by user to SWIFT system. When the system receives this retrieval message, it will actually retrieve those messages and present them to the user who wants those retrieved messages. So I could have 2 types: user to SWIFT and SWIFT to user. These messages are category 0 messages. The third kind of message is a service message. A service message is also known as the control message. I want to log in, or I want to quit, or I want an acknowledgement. These messages are the service messages. So when we have these message types, let's now look at the user-to-user message types. In the user-to-user message types, we have got 9 different categories. Category 1 is customer payments and checks. Category 2, financial institution transfer. 3 is foreign exchange and FX derivatives. 4 is collections and cash letters. 5 is securities market. 6 is precious metals and syndications. 7 documentary credits and guarantees. 8 is traveler checks, and 9 is cash management and customer status. In addition to this, there is also a common category called category N. And in this category, which we'll discuss of course on the next slide, we'll look at the numbering system. So in our discussion today, we'll be speaking about category 1 and category 2, and we'll also be speaking about category 9. Now when we speak about the N category, in fact in N category there are typically 7 types of messages: N90, N91, N92, N95, N96, 98 and 99, which is a free format message. And we discussed this 99 category earlier when we spoke about a corporate exchanging messages underscore with the parties. So we'll have these common category messages also which are available there. Now the N90 is used for advising charges, interest and other adjustments. The N91 is a request for payment of charges. 92 is a request for cancellation. 95 is a query. 96 is the answer. 98 is a proprietary message, and 99 is a free format. Let me also explain at this juncture only how do you use this N category. The N is to be replaced by the appropriate message category from the categories which you see on the screen. For example, I want to have a query about a customer related payment. The query message is N95. Then my customer payment related query message will be 195, 1 coming from the category 1 and 95 is the query. If I have a query about my bank statement is category 9, my query about that will be 995. And the answer to that query will be N96. So when I send a 995 asking you a question about my bank statement, your response will be 996 because N will get replaced by 9. If I have a question about my customer related transaction, customer transaction is category 1, my query will be 195. Your response to that will be 196. 98 is a proprietary format. Now, proprietary format messages are also used by financial institutions. That's called N98. So if there is a customer transaction, the message type will be 198. If the transaction is a bank-to-bank payment, that will be a 298. Now, this message type is used by banks with their own offices or with other financial institutions with which they need to have an understanding. They need to have a bilateral agreement with the other side that we would like to do this kind of messaging with you. It is used as an envelope for a specified message included in that particular message. This will allow the banks or the parties for defining a unique format which they can exchange with each other and which is not available in the SWIFT system. The last type of N category is N99, which is a free format. The free format means you did not understand the syntax. You can send the message like you write an email. So those who do not want to use or do not understand how to use the SWIFT syntax will go for the 99 category. Now let's move into Cat 1, Cat 2 and Cat 9. So when I speak about Cat 1, under Cat 1 we'll have different message types. I have selected a couple of them for you and then I'll be explaining to you the other types also, but discuss some of the major ones. Now category 1 is used for customer payments. The title is customer payments and checks, which means it can be used for electronic payments. It can also be used in case of check payments. Now under category 1 we have MT101, a request for a transfer. MT102 is a multiple customer credit transfer. MT102 straight through processing STP, again a multiple customer credit transfer. And in 103 we have got three types: 103 core, 103 remit and 103 STP. Now I have segregated these messages because all these messages which you see on the screen now are the push type of messages. You push money, you pay money to somebody by using this category. The MT104 which you see in red on the screen, which we are not going to discuss at this point because it's a pull message, is about a direct debit and a request for direct debit. So to summarize, we'll have MT101, 102, 103, which we will be discussing today. 104 is what we will not be discussing today. Having said this, there are two more types which do not come under series 1. They come under series 2, but they are expected to be used only along with MT103. Therefore, I'll also be discussing MT2. I'll also discuss today what is MT202 covered, which is General Financial Institution Transfer, and also the MT205 cover. We'll discuss both the serial method of payment and the cover method of payment. Now, in addition to this, in series 1, there are many other messages, but we are not taking them into account because those are all related to check payments. So what is our scope today? Our scope today, understand 101, 102 and 103 and both the serial and the cover method. Now let's understand what is customer payment and checks before we move to type 2. If any party in the payment chain is a non-bank entity, in that case, I would use series 1 for making the payment. And if all the parties in the payment chain are banks, I will use the series 2. The series 2 payments, I have the series 2 messages, I have divided them into two parts. As we said, series 2 is used when every party in the payment chain is a financial institution. So you cannot have a non-bank entity with which if you are doing a payment transaction, in that you will use series 2. Series 2 is to be used only when every party in the payment chain is a bank. Now, for our understanding, we are dividing these messages into two parts. You can see 200 and a 201 separately created by me, and then another category which I have created is 202, 203, 204, 205, 205 cover and a 210. Now, MT200 and MT201 are used by a bank to move its own money from its one account to its own another account. which means when the bank uses a 200 or a 201, the bank making the payment is also the beneficiary of that money. On the other hand, usually when I use an MT202 or a 203 or a 205, the bank which is paying is not the beneficiary of the money. So first two will usually be used when I want to move my own money to my own account elsewhere. The 202 and 203 and 205 will be used when I want to use my own money to pay somebody else. That is how it will come. And then MT210 is not moving money. It is only giving the information about receipt of a money. How this is used, I'll again cover that when we look at a real example. Once, to reiterate what we said earlier, we are discussing only push messages, and therefore I'm not discussing MT205, 204 in this discussion, which is in red on your screen, which is a push message, a direct debit. So what is out of scope currently is MT104, a customer related pull, and an MT204 is a bank-to-bank related pull. So our scope will be discussing 200, 201, and then these two is what we are not going to discuss. Out of that is 204. So this is the basic classification of MT2 series. Now let's move further and look at the category, which is category 9. Category 9 is called cash management and customer status. Now these messages, category 9 do not move money. They move information only, which means this could be used post facto, after the transaction has happened. Now here 9 is used in order to inform you about the transactions. So let's look at the MT900 and the 910 first before we move further. So we got two classes, 900 and 910 on one side, and then I would have the other types, 940, 941, 942 and 950 on the other side. Let's understand the classification which I have created only for our discussion today. Now whenever a bank debits your account for any outgoing payment, then your bank, assuming that of course you are able to receive these SWIFT messages, then every bank will send to you an MT900. So for every transaction of a debit in your bank account, I will have an MT900, and for every transaction of a credit in your bank account, I'll have the MT910, confirmation of credit, which means every entry, every transaction which is happening in your account in a day, either of a debit or a credit, would result into the bank sending you the 900 for every debit transaction, and your bank sending you a 910 for every credit transaction. So this is for every transaction which happens in the bank. Sometimes at the end of the day, you would like to receive a statement of all the transactions which have taken place in your account. In that case, you request the bank to give you your bank statement. This bank statement will consist of the opening balance, the debit transactions for the day, the credit transactions for the day, and the end of the day balance. If you want that statement, you could get a statement either in MT940 format, which is a customer statement message, or you could get an MT950, again a statement message. So statement messages 940 and statement message 950 provides you with the details of the opening balance, the debit transactions in your account, the credit transactions in your account, and the closing balance for the day. Then what is the difference between a 940 and a 950? Let's understand that also briefly before we move forward. Now when a 940 message is created, the 940 message is created by an account servicing institution, which means it is created by the bank holding an account, and it is sent to a party which could be other than the account owner. Let's take an example. If a bank called Jumbo Bank, a Gold Bank has an account of a company called Jumbo, if the bank sends this statement to Jumbo, Jumbo is the account owner. Jumbo should receive MT950. In other words, an account owner would receive from his bank a statement in form MT950. And when Jumbo wants its statement to be delivered to somebody else, some other party authorized by Jumbo company, in that case, the Gold Bank will send an MT940 to the other party which is authorized by the account owner. So these are the two types, MT940 and the MT950. As against that, you could only ask your bank to provide you with the balance report. The balance report comes in the form of MT941. This balance report or MT 941 is used to transmit only the balance information, and it reflects the situation at a given point in time. For example, in the field 13D of the message, you tell the bank tells you that this is the balance at, let us say, 2 o'clock in the afternoon. So then in that case, all the opening balance for the day, the number of debits and the amount of debits for the day up to 1 o'clock or up to 2 o'clock only, the number of and sum of credits up to 2 o'clock, and the balance would be given to you. So my balance statement in MT 941 does not give me transaction by transaction details. It gives me the opening balance, the summary of debit transactions, the summary of credit transactions, and the balance at a given point of time of the day. If I want that, I will need or I'll request for an MT 941. The MT 942 gives me interim transactions. Interim transactions meaning the bank has opened at 9 o'clock. At 12 noon, I tell my bank, give me the statement of all the transactions which have happened from 9 o'clock in the morning till 12 noon. The bank will send then to me the MT 942. It is used to transmit the details and the summary information about entries debited or credited to the account. Since the last statement, suppose I was given the statement last evening, then from that point onwards till now, if I want the statement, let's say up to 12 noon, I will get a 942. Then the last one is the request from the customer. A customer who wants to receive from his bank either a 940 statement, a 941 balance report, a 942 interim transaction report, or the 950 statement message, he would send an MT 920 request to his bank asking the bank to provide any one of these 940, 41, 42 or 50. So MT 920 originates from the customer to the bank, where the customer would ask the bank to provide him with a statement. The bank would respond with a 940, 41, 42 or a 50. Another point to note before we move further, we spoke about 900 and 910, which is created for every transaction, which means every 900 and every 910 must get reflected in your MT 940 or your MT 950, because MT 940 and 950 will be consisting multiple debits in your account and multiple transactions of credit in your account. All such will get reflected in your statement of account. So this is how you have the MT 9 series for doing the transactions. Now, having understood this MT 9 series, let's now move forward to the rules. Now I am taking you through the process where we have understood that I would use MT1 series for my customer payments. I would use 2 series when I am making a bank-to-bank payment. I would use 9 series when I want to receive or send information to my customers, or I want to receive information from my bank. That's how I'll use the 9 series. Now when we create the message, any SWIFT message for that matter, this is not limited only to category 1, category 2 and category 9. When you want to create any message from category 1 to category 9, the message needs to comply with 4 basic requirements. Out of these 4 basic requirements, 2 requirements are mandatory, they are a must, and 2 requirements are not mandatory, they are optional. You may follow them, you may not follow them. We are now going to discuss the first mandatory requirement. The first mandatory requirement is following or complying with the network validated rules, the NVR. Every SWIFT message would provide you with the network validated rules. Now what's a network validated rule? A rule which has to be complied with by the creator of the message, and if it does not comply with that message rule, the NVR, then an error code would be defined. Once you create a message, the network will check whether you have complied with the NVR, and if not, the message would get rejected along with the code. In other words, NVR is a rule which is validated by the SWIFT network. You create a message, when you create a message, the message must comply with the network validated rules. And many a times, the rule specified may affect more than one field in the message. It places then a condition on one or more than one field specified. Then in that case, these are also known as conditional rules if they impact more than one field. You see on the screen one example of the network validated rules for the message called MT103. This is only one of them. It's not the only one which has to be complied with. And you can see the error code is also defined there. To summarize on the network validated rule, it is a rule which has to be mandatorily followed by the creator of the message, has to be in line with the rules given in the user handbook. If you upload the message, the network of SWIFT will check the compliance, and if the compliance is not found, it may reject that message. This is the concept of the network validated rules. The second kind of rules which are mandatory and you need to follow them are the MT usage rules. The MT usage rules are not validated by the network, which means for these rules there is no error code defined, but these have to be used for the correct usage of the message. Again, this may affect more than one field. So the second compliance which is mandatory is to comply with the MT usage rules. So two compliances which I said are mandatory are MT network validated rules and the MT message rules. We also said there are two compliances which are not mandatory. These are optional. So you have the MT guidelines. The guidelines are not validated on the network and are not mandatory at all for the correct usage of the messages. They actually tell you about what are the good practices. The guidelines may affect more than one field in the message, but as we said a little while ago, these are not required to be complied with. The fourth optional compliance is the market practice rules. The market practice rules specify the rules published by some recognized market practices group. So here you have the example of the payments market practice group creating a rule for the MT103. Again, we don't need to comply with the MT guidelines. They are not mandatory, and we also don't need to comply strictly with the market practice rules. So both the guidelines and the market practice rules are optional for compliance. So this is the mechanism of the compliance. The first two, NVR and the usage rules, are must, and the next two are optional. Now let's look at the process of how the message gets uploaded. We have looked at the system of how do we create the message and then which are the rules to be complied with. Let's look at the compliance. Let's look at the process of uploading messages. Now on the screen, I got two entities. Gold Bank having the BIC, the business identifier code, GLBB indicating Gold Bank, IN indicating India, BB indicating Bombay, XXX could be representing any bank, any branch of that particular bank. So to summarize, I have GLBB, Gold Bank, IN India, BB, Bombay. On the other hand, I have got the bank called Silver Bank, which is indicated in the BIC by SLBB. US indicates United States, 33 indicates New York. So I got two banks, one in India in Bombay, another in USA, New York. The Indian bank, Gold Bank, wants to send a message to Silver Bank. What you see above the dotted line is the SWIFT cloud, the SWIFT network. At step number one, Gold Bank would upload a message. This message has to mandatorily comply with the NVR, and it also must comply with the MT usage rules. Once the message is uploaded, it is accepted by the SWIFT mechanism, the SWIFT network. The SWIFT network will now validate the network validated rules which are specified for each and every SWIFT message. If the network validation rules are met, we send back a message, an acknowledgement. So there are two kinds of acknowledgements. One is a positive acknowledgement known as the ACK, and the negative acknowledgement called the NAG. Now in response to every field message the SWIFT receives, it would send an acknowledgement message to the sending logical terminal. The acknowledgement message contains the message validation result. We said earlier that NVRs will have to be validated. So this includes the message validation results. When the message is validated, then you receive and it is found to be correct. The checksum is also correct. The checksum verified is found to be correct. Then we will send the ACK to you. If the checksum is found to be incorrect, then we will send the NAG. So ACK means SWIFT has accepted the message and is willing to process it for further delivery. NAG means the message fails to meet the compliance requirements of SWIFT. So let's assume that we have got an ACK. When you get the ACK, the message is now downloaded on the other side. It will be transported from India to USA and will be downloaded on the other side into Silver Bank's terminal. When it is downloaded in the Silver Bank's terminal is able to read that message. If it is able to read that message properly, it will issue the user acknowledgement, the UAC as I'm calling it on the screen. If the terminal at Silver Bank is unable to grasp that message, unable to understand that message, then it will give a negative user acknowledgement, which is the UNAC. So UAK or UAC would mean that Silver Bank has received the message, it is accepted it for processing. UNAC would mean Silver Bank has not received the message in the proper way. If requested by Gold Bank, SWIFT will also send a delivery notification of having delivered that message to Silver Bank. That comes here at step number 5. So in reality, when you make a payment, for every ACK which you have received for an outgoing message, you must match the delivery notification, because ACK only means SWIFT received it. ACK does not mean Silver Bank received it. To ensure that Silver Bank received your message, you can request for a delivery notification to be given to the sending bank, in this example, the Gold Bank. Now sometimes it may so happen that when Gold Bank uploads the message at step number 1 in the SWIFT's network, it is unable to get the ACK or an ACK. It does not know the status, it does not know the fate of that particular message. In that case, we will now resend that message with a flag called possible duplicate emission. So if you do not receive an acknowledgement of a FIN message within the timeout period, usually 15 minutes, then you must resend that message to SWIFT mechanism by using the possible duplicate emission trailer. At the same time, when SWIFT tries to download it in Silver Bank, it may not get proper UAC or a UNAC from Silver Bank. It does not know the status, whether Silver received it or Silver has failed to receive it. In that case, the SWIFT system would try to download that message once again in Silver Bank with a flag called possible duplicate message. The system itself will then add the PDM trailer to any output message which it is sending because of invalid prior delivery. So in this way, you will have the delivery of the messages being done between two banks. Now, having understood the concept of delivery, let us now start with the discussion on MT1 series, which is the core topic of our day, understanding the MT1 series. Now let me take you one by one. The first message which we are going to discuss is the MT101, which is a request for transfer. Let me explain the scenario to you first. When we look at the scenario, then we understand it, and then I will explain how the messages are used. Now let's understand where we will use the MT101. This message can be sent either by a non-financial institution account owner. Now in this example, the non-financial institution account owner is Jumbo Company. Jumbo Company has an account with Silver Bank. So you have got two financial institutions here, gold and silver. This message can be sent by Jumbo Company or any party authorized by this Jumbo, who is the account owner. And we will send this message to Gold Bank and then through Gold Bank to Silver Bank. Let's understand who is having an account with whom. So Jumbo Company in this example has 3 accounts with Silver Bank: account number 1, account number 2, and account number 3. Our assumptions could be 2. 1, Jumbo does not have SWIFT connectivity. 2, Jumbo has SWIFT connectivity. It could be either of them. Now if Jumbo does not have SWIFT connectivity, it will communicate with its bank, Gold Bank, telling Gold Bank to tell Silver Bank to move money from Silver Bank. So let's understand once again. Jumbo has account with Silver Bank. Jumbo is asking Gold to ask Silver to make the payment out of Jumbo's account with Silver. So Jumbo sends a non-SWIFT message, because assumption here is Jumbo does not have the SWIFT connectivity. When Jumbo has the SWIFT connectivity, it will use the MT101, asking Gold once again that please make the payment out of my accounts at Silver Bank. When Gold Bank receives this message, at Gold Bank we are not doing any accounting entries, because we are only acting as a pass-through. We will take this message from Gold Bank, from Jumbo Company at Gold Bank, and then forward this MT101 to Silver Bank. We are now Gold Bank. We are telling Silver that our customer Jumbo wants to make a payment out of its account with you. When Silver Bank receives this message from Gold Bank, Silver Bank would then move money as per the instructions given by Jumbo through Gold Bank. This is how MT101 is used. It can be used to order the movement of funds from Jumbo's account at Silver Bank to somebody else. So it can be ordered that out of account number 1, make the payment to beneficiary 1. We can also order simultaneously that pay more than one beneficiaries, one at your bank itself, that is beneficiary 1, and another beneficiary at Ulster Bank, beneficiary 2, make both these payments. So in 101, I could have multiple payment instructions, beneficiary 1 as well as beneficiary 2. In this example, beneficiary 1 is the customer of Silver Bank itself, therefore there is no CSM involved, it's going to be a book transfer, and beneficiary 2 is not a customer of Silver Bank, therefore we are using the clearing and settlement service. The other mechanism could be Silver Bank is told by Jumbo to send a check to beneficiary 3. Now all these 3 payment instructions can come in single message. When we create this MT101 message at a Jumbo or at Gold, this message will have 2 sequences. Part 1, that is sequence A, and part 2 is sequence B. Part A, sequence A, is general information, and sequence B is repetitive information. What is repetitive information? Pay beneficiary 1 so much amount on such and such day. Pay beneficiary 2 so much amount on such and such day. Pay beneficiary 3 are the repetitive sequences. So this message can be used to make multiple payments simultaneously. Now some of you may have this question that if Jumbo has an account with Silver Bank, why is it not speaking directly with Silver Bank and speaking only through Gold Bank? Let me answer that question to understand the business case. Now there could be 2 business cases which I could take here. Business case 1 is where Jumbo has outsourced its vendor payments to Gold Bank. It is possible that Jumbo has got numerous accounts across the globe, across the world, but it does not wish to speak directly with each of those banks. It is telling Gold Bank that whenever I want to pay any vendor anywhere across the world, I will give the instructions to you only, and you, Gold Bank, on my behalf, operate all my global accounts. So if that kind of a vendor payment management service is being offered by Gold Bank, in that case, Jumbo would not speak directly with any of those banks. Jumbo would speak only to Gold as a single point of contact, and Gold in turn on behalf of Jumbo would speak to all the remaining banks. This is scenario 1. The second scenario, second business case where this could be used is cash concentration. The Jumbo has got offices and bank accounts across the globe. It wants to move all its money at one single place, maybe at London in UK. It would now tell Gold Bank that at the end of the day, whatever is my balance across the globe in all my bank accounts, move it to one single place. This job of concentrating money is given only to Gold Bank. Gold Bank then, on behalf of Jumbo, will speak to all the other banks where Jumbo has its account, move the money from all those accounts into one single place in London. This is how the company called Jumbo does not speak to all the banks where they have the account. They will speak only to one bank, who in turn will speak with the remaining banks where Jumbo has its account. In this manner, the MT101 is used. Now, if Gold Bank has to speak with all the other banks like Silver, the other banks like Silver need to know that Gold Bank has the right to operate Jumbo's account. That is where we have this concept of bilateral agreements. The banks need to enter into an understanding that Gold is authorized, Gold is allowed to operate the account of Jumbo at the other banks. This is how MT101, the request for transfer, is used to move money, to move Jumbo's money at some other banks, but the party who initiates this payment, the bank which will initiate the payment in this example would be Gold Bank. Let us now move to the second example. But before we move to the second example, I want you to note one fact here clearly. In this example, at Silver Bank, it is Jumbo who is having the account. And Jumbo is a customer of Silver Bank here. So please keep this in mind that in MT101, when the money was paid out of Jumbo's account at Silver Bank. Why I want you to remember this is because of MT102. Now in MT102, I am still having the Jumbo Bank, the Jumbo company. I am having Gold Bank and I am having Silver Bank. But we need to note one more fact clearly at this juncture is now in this example of MT102, Jumbo is not the customer of Silver Bank. In this example, Gold Bank is the customer of Silver Bank. Gold Bank holds the Nostro account at Silver Bank. So please note this difference. I'll repeat this point, that in the earlier example of MT101, Jumbo was a customer of Silver Bank and had account with Silver Bank. And please note carefully that in this example of MT102, Jumbo is not a customer of Silver Bank. It does not have any account with Silver Bank. In this scenario, Jumbo is a customer only Gold Bank, and Jumbo has an account only with Gold Bank. Jumbo has no relationship with Silver Bank. Now when the message process starts, the Jumbo company is intimating Gold Bank to make multiple payments to its vendors. Beneficiary 1 is a vendor of Jumbo. Beneficiary 2 could be a vendor of Jumbo. Beneficiary 3 could also be a vendor of Jumbo. So when this message is created by Jumbo, it is sent to Gold Bank. When Gold Bank receives this message, Gold Bank would debit Jumbo's account, because Jumbo's account is now only at Gold, forward an MT102 message to Silver Bank that out of Gold Bank's account with Silver Bank, make multiple payments. So this message is sent by Gold Bank on behalf of the ordering customer Jumbo to another financial institution Silver Bank for making payment to various beneficiary customers. The message is requesting Silver to make the payment to beneficiaries either directly meaning beneficiary 1 is directly with Gold Bank, so make that payment directly, or indirectly, where it could be through CSM and then to Ulster Bank and then almost to beneficiary 2 and maybe through a check. So this is how you can have 102 used to convey multiple payment instructions in this example. The account which is getting debited now at Silver Bank is not belonging to Jumbo. The account which is getting debited at Silver Bank is the account of Gold Bank. It is the Gold Bank Nostro account. Now this 102 could be used for a domestic payment within a country. It could also be used for cross-border payments. Same is the case with your MT101. I'm going to the next point now, is understanding the MT103, and probably here is where we'll be spending a little more time in discussion. So let's look at the MT103, a single customer credit transfer. Now if you have understood MT103, it's quite simple to understand MT103. MT102 has multiple beneficiaries, like we had beneficiary 1, beneficiary 2, beneficiary 3. If we take the same example but only with one beneficiary to be paid, only one party to be paid, I would use an MT103. So in case of MT103, again in this case also, Jumbo is not a customer of Silver Bank. Jumbo is a customer of Gold Bank only, and at Gold Bank Jumbo has its account. So this message would be sent by Gold Bank on behalf of Jumbo company. Jumbo is the ordering customer here for Gold Bank. It could send it directly or through a correspondent, asking Silver Bank that Silver Bank please make the payment out of Gold Bank's account and pay some beneficiary. So you would have the first payment where the beneficiary also has an account with Silver Bank. You have the second payment where the beneficiary has an account with somebody else. Now in this case, please note that I am not using the name beneficiary 1, beneficiary 2, beneficiary 3, because in a MT103 single customer credit transfer, you can pay only one party at one go. You can't pay multiple parties. This is a single customer credit transfer. So when we want to pay beneficiary 1 directly, I would use this message. When you want to pay beneficiary 1 at Ulster Bank, then same message. But in one message, you cannot have more than one beneficiary if the message type is MT103. Under MT103, there are three subtypes. I will use the words MT103 core, MT103 STP, and MT103 remit. These are the three types of messages which we get under MT103. So where do you have the Jumbo account here? The Jumbo account is only with Gold Bank. There is no Jumbo account at Silver Bank. This is the example of MT103. Now I'm going to explain two more mechanisms under MT103, which is MT103 serial method of payment and MT103 cover method of payment. Now when we have the serial method of payment, to explain both of them, in fact, I'm going to use an example. This is our example. We have got two companies, Megacorp and Michelin. This is going to be, in our example, a cross-border payment. Megacorp banks with Gold Bank in UK. It wants to remit an amount of $10,000 to Michelin Tires banking with Silver Bank in New York. So you've got two countries. One country is UK, the other country is United States. Diamond Bank in USA is the correspondent of Gold Bank in UK. Since this is a cross-border transaction, we'll use the SWIFT mechanism MT103. Two mechanisms I'm going to use, a serial mechanism and the cover mechanism. This is our case. We've got two countries. The line divides UK and the United States. The first part is Michelin is the seller. He's going to be the beneficiary under the transaction. Megacorp is the buyer. He's going to send the money. The first stage is Megacorp has an account with gold. Michelin has an account with silver. Gold has a correspondent called Diamond in United States. So at Diamond, gold would hold its Nostro account. Let us start the process. The first step, Michelin has sold the tires to Megacorp. Megacorp now needs to make a payment of $10,000. Megacorp would tell its own bank, Gold, to make the payment. At Gold Bank, Megacorp would have its account. We would convert this GBP currency or the euro into dollars, and then after having debited the party, Megacorp, and credited our Nostro Mirror account in our own books at Gold Bank, we create the MT103. This MT103 moves from Gold to its correspondent bank, Diamond Bank. Now when Diamond Bank has received the message, at that point of time, Diamond Bank would debit the Gold Bank's Nostro account in Diamond Bank's books and credit their own settlement account. They will release an MT900. We discussed MT900 earlier, and we said for every debit entry for an outgoing transaction or maybe charges, we'll issue an MT900 to the customer. So here Diamond has a customer called Gold Bank. Diamond has debited at step number 5 the Nostro account of Gold Bank. We release MT900 telling Gold Bank that we have debited your account by the amount of $10,000 because of a particular MT103 which has come into us. Once Diamond has debited Gold Bank and released the MT900, we will push this 103 from Diamond to Silver. Now the MT103 message has moved serially from Gold to Diamond and from Diamond to Silver Bank. After having pushed this message 103 from Diamond to Silver, we'll create one more message at Diamond which goes to the local clearinghouse. It could be a Fedwire 1000 message. It could be a CHIPS message which has gone to the clearinghouse like the Fedwire or the CHIPS. At Fedwire or CHIPS, Diamond and Silver would have their participation, their accounts. When this message is received by Fedwire from Diamond Bank, Fedwire will debit Diamond Bank at the master account at Fedwire and credit Silver Bank's master account again at Fedwire and forward that completion of the transaction, the settlement of the transaction to Silver Bank. Now Silver Bank has got two messages, one incoming MT103 at step number 7 and another incoming credit advice from the clearinghouse at step number 10. Ideally, we should compare the messages coming at 10 and 7. Once both of them are matched, that is credit advice is matched with the MT103 coming in from Diamond, then at Silver Bank we'll credit the beneficiary, that is Michelin. This is the mechanism of serial method of payment. This is how we do the serial method. Now let's move forward and understand the cover method of payment. Now in cover method of payment, I'm using the same example. So we are back to square one. I'm on the cover. The first step I have already clarified to you. Now this is the step up to which we are having both the things in common. Michelin has to be paid $10,000 by Megacorp. Megacorp tells its bank, Gold Bank, make this payment. When Gold Bank receives this instruction, they are going to debit Megacorp, credit Nostro Mirror. Now at this juncture, the difference is going to start. In the earlier example, Gold Bank created an MT103 and from Gold Bank in UK, that MT103 went all the way to Diamond Bank in USA. Instead of that, Gold Bank creates an MT202 cover and sends it to Diamond Bank and creates an MT103 but sends it directly to the last bank in the payment chain, which is Silver Bank. So instead of sending this MT103 from Gold to Diamond and then from Diamond to Silver, we have sent it directly from Gold to Silver. If this mechanism is used, this is called as the cover method of payment. MT103 starting from the first bank going directly to the last bank, and instead of MT103 coming from Gold to Diamond, in this case we created another message called MT202 cover. This MT202 cover will inform Diamond Bank that Diamond Bank has to debit Gold Bank's Nostro account and make the payment to Silver Bank. It will have two sequences. Sequence A, telling who is Gold Bank, who is Silver Bank, and sequence B telling Diamond Bank who is Michelin and who is the sender Megacorp. So in this 202 cover, though the series used is a bank-to-bank payment, it is used typically along with an MT103. So Diamond Bank, when it receives this message, would now have only one message to process. They will debit the account of Gold Bank, send back an MT900 confirmation of debit. MT950 could be your end of the day statement, and send a Fedwire payment message, since we are doing this in USA, to Fedwire, telling Fedwire to move money from Diamond's account to Silver's account. When this is done, Silver would get the credit advice. Silver would have received MT103 directly from Gold at step number 4. At step number 9, it receives the credit advice from Fedwire. We compare both of them and then we credit the beneficiary. This is the other mechanism called the cover mechanism of making the payment. So we have seen two mechanisms, a serial method and a cover method. If you look at the SWIFT chart, this is how the serial and the cover method would look like. In the serial method, the message 103 flows in sequence. So you can see 3 MT103s under the serial method. Bank Austria sends message A, MT103, to Chase. Chase creates another message, message B, and it is sent from Chase to ABN. ABN again creates the third message, message C. It goes from ABN AMRO New York to ABN AMRO Amsterdam. This is how the serial method would work. In a serial method, the 103 would flow continuously from first to second, second to third, third to fourth, till the last bank receives that 103. In a cover method, if you can see the other example on the screen, Bank Austria creates the 103. It goes directly to the last bank, that is ABN AMRO at Amsterdam. So in this case, the message 103 starts from the first bank and goes directly, bypassing everybody else, to the last bank. This is the process called the cover method of payment. So we have seen two mechanisms, the serial and the cover. Now at this juncture, we have discussed three push message types under customer credit category: MT101, MT102, and the MT103. Let us now look at the series 2. Series 2 is used for bank-to-bank payment, and in bank-to-bank payment we had said there are a couple of types which are used only for own purpose. So we are going to look at MT200. The MT200 is used by a bank to make payment out of its own account and move that money to its own account elsewhere. So now in this example, Gold Bank has an account with Silver Bank, and Gold Bank also has an account with Diamond Bank. So both the accounts are owned by Gold Bank at the Silver Bank as well as at the Diamond Bank. Now Gold Bank wants to move this money from its own account at Silver to its own account at Diamond Bank. This is how 200 would be used. So at this juncture, let's go forward and also understand how now 9 series is also used. So I'll cover 2 series and 9 series together now. So in this case, Gold Bank wants to move its money from its account at Silver to its account at Diamond. Gold Bank creates an MT200. This MT200 is released by Gold. It goes to Silver Bank. It tells Silver Bank that move Gold Bank's money to its own account, Gold Bank's account at Diamond Bank. When Silver receives this message, Silver will create a clearinghouse message, the clearing system message, by debiting the Nostro account of Gold Bank and crediting in their own books, that is in Silver Bank's books, the settlement account mirror. Once this is done, they will send the confirmation of debit, because we have, that is Silver sends a confirmation of debit because we have debited Gold Bank's Nostro account. When this message goes to the clearinghouse, clearinghouse would debit Silver Bank in their books and credit Diamond Banks in their books, complete the settlement. Once the settlement is completed, they will inform Diamond Bank that we have paid you. When Diamond Bank gets paid, Diamond Bank would credit the Nostro account of Gold Bank, and after that they will send the MT910, which is the confirmation of credit message, to Silver Bank. So Silver Bank sends the MT900 confirmation of debit. Diamond Bank sends MT910 confirmation of credit. This is how MT200 is used. In this MT200, just to summarize, Gold used MT200 to move its own money at Silver Bank to its own account at another bank called Diamond Bank. This is MT200. Now what would be the difference between an MT200 on one side and an MT201 on the other side? Only one simple difference. In this example, Gold moved money from its own account at Silver, and there was only one transaction involved here, moving the money to Diamond Bank. If Gold wants to move money from Silver Bank at two different places simultaneously, which means there are going to be two payment transactions, in that case we will use the MT201. So in MT201, I'll have this scenario where Gold has three bank accounts. Gold has a bank account with Silver Bank. Gold has a bank account with Platinum Bank. Gold has a bank account also with Diamond Bank. What Gold wants to do is Gold wants to move its own money from Silver Bank to its own accounts at Platinum Bank as well as at Diamond Bank. So there are two transfers originating at one go from Silver Bank. One transfer going from Silver to Platinum, another transfer going from Silver to Diamond. If I want to move two transactions simultaneously, I would use a 201. If I wanted to move one transaction only, I would have used an MT200. So in this example now, we want to move money from Gold Bank's account at Silver Bank to Platinum. This is transaction 1. Transaction 2 is from the same account at Silver Bank to the account at Diamond Bank. So there are two transfers to be made by Gold Bank. If they want to make these two or more than two transfers, Gold would now create an MT201. It goes to Silver. Silver will now create the CSM message and send a debit advice, the confirmation of debit to Gold Bank that we have created these transfers. This is what that MT900 is, telling Gold Bank that we have debited your account at Silver Bank for two transactions. Once this is done, CSM will process the settlement. CSM will send that transaction message of settlement to both Platinum and Diamond. When Platinum and Diamond receive this money from the clearing system, they will credit the account of Gold Bank, both at Platinum and Diamond, and then issue the confirmation of credit MT910. So both of them send the MT910 to Gold Bank. Platinum sends an MT910 confirmation of credit. Diamond sends an MT910 confirmation of credit. This is how the messages will reach Gold Bank. Gold Bank now realizes that the credit has happened. At the end of the day, all the banks would send an MT940 or an MT950 depending upon the situation. In this way, the payment would be made by using MT201. So to summarize, 200 is for one single transaction, 201 is for multiple payment transaction, and in both the cases the beneficiary was the same party who had sent the money. In this example, Gold had sent the money, the recipient of the money was also Gold. This is how the MT200 and the MT201 would be used. Now we have understood 200, 201. Let's look at 202. I'm going to use an example once again to explain the 202. In the 202 example, we have four banks. One bank is Jameson, the other is HSBC, the third is Fortis, the fourth is Citibank. Now in this example, Citibank USA is the correspondent of Fortis Bank in Brazil, which means at Citi, Fortis has its Nostro account and Jameson has its Nostro account at HSBC. Jameson Bank wants to pay an amount of $10 million US dollars to Fortis Bank in Brazil. So this is the summary of our example. We are going to use an MT202 in this case. Since the transaction of payment is in USA, I will use the US RTGS system there, which is the Fedwire RTGS system. Let's understand the process. Now in this example, Jameson and Fortis enter into a transaction with each other. That they have done a deal. Jameson will lend $10 million to Fortis. That's how we have understood the transaction. Now Fortis is expecting this money from Jameson, and the money would arrive in Fortis Bank's Nostro account at HSBC. It is possible for Fortis Bank to inform HSBC in advance that you should be expecting this money in Fortis Bank's account at HSBC. So Fortis Bank intimates HSBC in advance that you should expect an amount of $10 million in my account, which will come from Jameson through Citibank. HSBC receives this notice, MT210 notice to receive. In this MT210, Fortis is telling HSBC that you should expect an amount of $10 million to come into my account on such and such date from such and such bank. This is the message called MT210 notice to receive. This gives advance intimation to HSBC that some money is expected to arrive from Citibank. When this is done, Jameson will now initiate the payment transfer. Jameson has its nostro at Citibank. Jameson intimates Citibank that please pay $10 million to Fortis Bank having an account with HSBC. For this, Jameson would use an MT202. When Citi receives this message, Citi is going to debit the nostro account of Jameson Bank and credit the RTGS settlement account. At this point, when Citi debits Jameson's account, we will issue an MT900 to Jameson, telling Jameson that your account has been debited. Citi would now create a message which is used by the RTGS system. This could be a SWIFT message, this could be an ISO20022 message, this could be a proprietary message. In USA, they use the ANSI, the American National Standard Institute's formatted message, ANSI messages. So an ANSI message goes to the Federal Reserve. At Federal Reserve, we will have the account of Citi and HSBC. We debit Citi, credit HSBC, and forward the settle message onwards to HSBC. When HSBC receives this message, HSBC would credit the account of Fortis and intimate Fortis by sending a confirmation of credit, that is MT910. In this way, Fortis would come to know that the account has been credited. At the end of the day, both Citi and HSBC may send a 940 and a 950 statement depending upon again on the situation. So this is how the 2 series is used. In this example of 2 series, we used only one transaction. We created only one transaction, Jameson making a payment to Fortis Bank, single transaction. If we wanted to make multiple such payments, then I would have used an MT203. An MT203 is used to make multiple payments. So Jameson wanted to simultaneously pay Fortis, maybe Wells Fargo, and maybe somebody else. In that situation, instead of using an MT202, I would have used an MT203. Now the message type which I have not yet discussed is MT205 out of the messages which we spoke about earlier. A 205 and a 202 are almost identical. The basic difference between a 202 and a 205 is a 202 is used for cross-border transactions, and in this example, since we had a cross-border transaction, we had used an MT202 originating from Jameson to Citi. If all the parties in this transaction were within one country, like Canada or like United States or in some single country, in that case, for a similar transaction in which was a domestic transaction, I would have used a 205. To summarize then, the basic difference between a 202 and a 205 is a 202 is to be used for a cross-border payment transaction like the one which you see on the screen, and a 205 is to be used when the transaction is done within one single system, within one single country. That's how the 202 and 205 will differ. So what we have discussed in the 2 series are 200, 201, 202, 205 and 20210, that is 210. We have also discussed the 202 cover and a 205 cover. So in summary, we have discussed series 1. In series 1 we have discussed 101, 102 and a 103. In series 2 we discussed 200, 201, 202, 203, 205 and a 210. In series 9 we discussed 900, 910. Then we discussed 920, 940, 941, 942 and 950. So this is the summary of what we have discussed today. Now before we conclude on this, because this is where I'm completing my presentation. Now if you have, any one of you have any questions from your side, you can go ahead and ask those questions to me. So now I'm opening the question and answer session at this point. Any questions which you may have on any of these series? And in case you are not able to speak with me, you can type your question on the question pane. I'll answer that question.